Hi, this is PR Sundar and welcome to this special episode sponsored by taxbuddy.com, and I'm going to talk about market outlook for the next few months. One day, one guy asked me, sir, during the next 1 year, tell me how much market can go down and how much market can go up. And I told him, markets will go down to the extent where everybody become fearful, and markets will go up to the extent where everyone become greed. The market's swing is always between greed and fear. And you may remember what happened in 2008, Lehman Brothers collapse, and 2020, coronavirus, as if the markets, as if the world is coming to an end, so it went to the point where everybody got fearful. And then, there are a lot of bull markets you must have seen, the peak of the greed. Simply speaking, markets move between fear and greed. And now we can say with last few days of development, we can say very, very clearly that fear has gone. But at the same time, definitely we are not at the peak of the greed. Just to give you an example, 2008 Lehman Brothers collapse, and 2020 coronavirus, 2022 US inflation-led fall. So these are the three major corrections I've seen in the last 15 years. But in fact, I can say this 2022 inflation triggered correction, I can say is the worst correction I have seen. Not in terms of the price damage. And 2008 Lehman Brothers collapse, the markets were falling, like continuously for some time, then stabilized, then markets moved. So market came down one way and then stabilized at the lower level and went up one way. It was easy to trade. And same was the case with coronavirus. Both Lehman Brothers collapse and coronavirus, the fall lasted only few months, and after a few months market stabilized and the markets moved higher. But what happened in 2022, if you can see Indian market, and since last October, and markets were coming down, again going up, again coming down, again going up. If I'm not wrong, the figures which I'm giving only a rough figure, I'm not looking at the data. So since last October until this July, you can see NIFTY went from 18,600 to 16,400, then from 16,400 to 18,300, from 18,300 15,700, from 15,700 18,200, 18,200 it again went because of the HDFC merger news, and then from there it came down to 15,200, again from 15,200 now to 17,200. So NIFTY has made more than 2,000 point move upside as well as downside many times. And this has not happened even during Lehman Brothers collapse and coronavirus. So one bad news came, markets fell, understandable, market stabilized at the lower level and market started moving higher, and that's it. But now markets are making, like one day it's going to the sky, the next day coming to the earth. So this huge volatility, that too lasting much more than the previous corrections like Lehman Brothers collapse and coronavirus, and this almost 10 months. Another factor we have to discuss, how can we forget FIIs when we are talking about Indian markets. So FIIs have sold so much of shares and much more than what they have sold in 2020 coronavirus and 2008 Lehman Brothers collapse. And one can say, sir, Lehman Brothers collapse, NIFTY was 6,000, now we are 18,000. But I'm factoring in all those things. Assume that NIFTY was at 6,000, Lehman Brothers collapse, 18,000 in now. So if they have sold 3 times more, that is understandable. But they have sold 10 times, 20 times, 30 times more. And almost everyday basis, they used to sell 2,500, 3,000 crores. And continuously they have sold, so like more than 40,000 crore almost on a every month basis. So what happened, and because of all these things, I can tell you how the fear has gone to the extreme. I'm not talking about X, Y or Z. The RBI deputy governor and came out with a paper and saying that, India may see a black swan event and FIIs may sell additional $100 billion during next 1 year, and that can be a very big black swan event in India. So you can see a person at that level and can show such a fear, that the fear is at extreme level. And what happened after that? The markets rallied 2000 points. And it is not only the RBI deputy governor, even Fed chairman Jerome Powell, few months before, he said inflation is transitory. But what happened? After that only the inflation data came highest level in last 40 years. So the markets will prove everybody wrong. And I'm not talking about normal people at the highest level who has got the access to all the data, and they can go wrong so terribly. So that is market. So I always just to make fun, I used to tell, no matter how much you try your best, and market and your wife will always prove that you are wrong. So now, having discussed all these things, now the $1 million question comes, what next? Markets have rallied fantastically, 2000 points from low, and Nasdaq has been oversold on a longer time frame. So Nasdaq still can move higher. And now the fear is gone. I will not be surprised even if NIFTY takes out all-time high by the end of December. And I will tell you why. So as I told you, we have seen the fear in this year, and we may see the greed also in this year. And I will tell you how that greed can come. So the first we talk about the fear. When global economic situation is bad, and what happens? The FIIs, who are major players in India, so they have a double whammy. That means, let us say, when the price falls in Indian market, so they lose money in Indian stock market. And then even after loss, if they are selling the shares and they are transferring the money to US, so by that time the currency would depreciate. When the economic situation is bad, the currency will depreciate. So they will have a double whammy. They lose Indian stock market, also they lose in currency exchange rate. So that is why when they see the problem, they are the first people to sell and take the money away. Now what has happened? Indian markets have corrected, let us say, about 15-20%, and then currency depreciated about 10%. So Indian markets have seen about 25-30% correction in terms of US dollar. And now when things are looking good, worst seems to be over in US market, US inflation also. So if the worst is over, markets are turning around, markets are moving higher, and what will happen? The FOMO effect, fear of missing out effect will come to FIIs, and then they will start buying. And when they start buying, they get double benefit. One, price goes higher, they make money, and Indian rupee also appreciates. And after a long time, there is a stability in Indian rupee. Indian rupee is slightly appreciating. So about 1 week, 10 days before, it crossed 80 per dollar. Now it is appreciating. So if it appreciates to, let us say, 79, 78, 77 like that, then the FIIs will have a FOMO effect, and the FIIs who are entering now, they will get double benefit. So by seeing that, more and more FIIs will want to come, and more buying will happen. And that's one thing. Second thing, in the past corrections, I would say, in fact, this US inflation-led correction is the worst one, which I forgot to mention. In fact, Lehman Brothers collapse and coronavirus, it triggered correction only once. But this US inflation data gave a correction 3 times in the last 15 years. And 2013, taper tantrum, that triggered a fear of inflation. and then 2018 and then 2022. So there were 3 corrections. So in the past, as and when the correction comes, what happens? It is the domestic institutions will be pumping in the money, like mostly mutual funds. So when the markets goes higher, these mutual funds, they look to book the profit, so they make sure that the markets don't shoot up violently. But what happened this time, most of the money has come to the market to support the market at the lower level are from insurance and provident fund money. So if they have no hurry to book the profit, so the market can go significantly higher. So whether the market goes to all-time high or not, that's altogether a different matter. All-time high is just only a number. But all I can say, the market, the structure is changing from bearish to bullish. So technically also, Bank Nifty has taken out 200-day moving average decisively, and Nifty also took 200-day moving average decisively. So now definitely it is not the time to be bearish, but at the same time, many people misinterpret my statement. So when I say now it is not time to be bearish, time to be bullish, then if tomorrow market correct 100, 200 points, then they say, sir, you said market bull, you know. So market bull, it does not mean that market will have to go in one straight line. Markets can always correct and profit booking may come even in a bull market. In fact, in bull market only the corrections will come more, because bull market only many people will be sitting with a good profit, they will book the profit. In a bear market, who will be sitting with profit? Right? So nobody will be sitting with the profit, so there is no profit booking. Only the short sellers will be covering their shorts. So markets may go up and down, but the fear, the extreme fear is definitely gone. So from now onwards, one should maintain a bullish view, like something like, we can say a buy on dip strategy. So of course I am an option seller. So I go and sell 15,000 put option, 16,000 put option in December month, So I still believe that, the worst is over and Nifty is not going to fall below 16,000 at least for next 2 to 3 months. But remember, I am not a SEBI registered research analyst. So this is my personal view, and then also bearing unforeseen circumstances. And last year I took a very bullish view. Even I gave a target of 20,000 for Nifty. But what happened? This US inflation came and spoiled everything. So like this, from now to December, one more thing can come, right? Just like coronavirus, one coronavirus may come, can change the whole thing. But whenever we talk about a future projection, we base on the past performance and assuming that the past trend continues. So, tomorrow some natural disaster can come, so anything can happen, So bearing unforeseen circumstances, the markets are bullish now. So it's better to maintain bullish view. So hope you enjoyed watching this video. Thank you for watching.